The broadcast is now starting. All attendees are in listen-only mode.
Good morning, everyone. Thank you for joining today's webinar. I would also like to thank Eureka for inviting EBAN and Europe Unlimited to collaborate on this investment readiness program, high-tech investment program. Before we start, just a few technical remarks. We will keep you all on mute during the webinar. And after the presentation, we will dedicate some time to questions. So if you want to ask a question, please raise your hand. There is a button on the top right side, and then we will unmute you. And now I would like to give the word. My name is, by the way, Ana Barjasic from European Business Angels Network, and I'm managing this project on behalf of EBAN. And now I would like to give the word to Candace Johnson, the president of EBAN.
Good morning, entrepreneurs. We're so happy to have you with us. We have 62 of you from Denmark, from the Netherlands, from Bulgaria, Switzerland, Italy, Bulgaria, Spain, etc. So we're very pleased. Also, the sectors that we have represented are healthcare, medtech, life sciences, clean tech, and ICT. This is an important series of webinars that Eureka has put together with the help of partners such as EBAN and Unlimited. This first seminar is dedicated to potential sources of investment. You have all been working so hard throughout these last years with the Eurostars and the Eureka Clusters projects to get your companies up and running. Now you are ready to become investment ready. And that is the goal of this project. And to do so, we have these 3 seminars. So the first one, potential sources of investment. The second one, raising capital through effective processes. And 3, communicating with investors. I hope that all of you will continue to join us for these 3 seminars. Kicking off this first seminar, I'm so pleased to say that our main speaker will be Modwenna Rees-Mogg. And I have worked with Modwenna to make certain that we cover all of the potential sources of investment, because not only is it business angels, not only is it banks, not only is it crowdfunding, not only is it equity or debt, it is also now increasingly stock exchanges and banks that are coming to help Europe and Europe's high-tech entrepreneurs really go from a startup to a scale-up. So with that, I wish you all the best of success. We are here for you, Eureka, EBAN, and Unlimited, not only during the webinars, but also throughout this entire project. Please always feel free to reach out to us if you have questions. And with that, I'm delighted to turn now the discussion and the presentation over to Modwenna Rees-Mogg, CEO and founder of AngelNews. Modwenna, thank you so much for being with us today and giving of your time and experience and knowledge to our high-tech entrepreneurs.
So, Modwenna, over to you.
Good morning, everybody. It is I'm here in England, but it is enormously exciting to be talking to so many of you across Europe at the same time, and I hope you will find today's presentation helpful. Please, could you turn the slide? Anna. Hello? Hello?
Can you see the slide now?
Hello, Anna?
Yeah. Can you see the slide now?
I'm afraid I can't, Anna. No. Oh, yes, now I can. Yes, thank you very much. Right, please, could you turn the slide? Okay. As Candace has just said, there are so many sources of finance today, and for the ambitious entrepreneur, there will be a source of funding for you. Today's talk will discuss 6 major areas: the overall world of private investors and angels. We will talk about how investors think when they are considering whether to invest in your business. We will cover the main areas of equity crowdfunding and angel investing and venture capital, and we will also talk about tax breaks and other motivations. I will also talk a little bit about the attitude of banks and others to as sources of finance after I have talked about tax breaks. If you could turn the slide, please, Anna. For investors in today's world, it is very important to be active in their investing. The activity they are showing into private companies is booming at the moment. This is because they want to get more control over their investments and insight into what they are investing in. They are also unhappy often with the performance of some fund managers. Investors are also looking for superior returns, that is, increased capital returns, but also income returns from traditional sources of their money to be invested. For example, stock markets, commodities, and property are not necessarily giving the positive returns that investors want, and therefore they are seeking to invest in private companies. Another advantage for entrepreneurs today is that many governments are offering generous tax breaks and other incentives to encourage investors to invest in businesses like yours. Please could you turn the slide, Anna? The world of private investors and angels is a very interesting one for people today. It is very accessible now for investors to get to exciting entrepreneurs. They are finding them through the internet and through advisors and through intermediaries, and the stories of companies like Apple and Facebook and WhatsApp has encouraged more people to seek out an opportunity to invest in, as we call it, the next billion-dollar startup. They are finding private investing fun, and it is also cool. I'm not sure if that is a term we use across Europe, but certainly in the UK, it is fashionable and exciting to be seen to be an investor into a startup company. And this is a big advantage for entrepreneurs who want to raise money. We look for also entrepreneurs to find investors as well, and you can find investors through advisors and intermediaries, through accelerators, and from many other areas. I'm sure EBAN and the colleagues on this program will be able to help you on that. The weak global economy has also meant that there have been few jobs created in larger companies, and therefore that is encouraging high quality individuals to start businesses. Investment by private investors in the US and Western economies is something like 3 to 5 times that of venture capital, which is the formal world of investment. It runs into billions of pounds every year. In the area of crowdfunding, which is the new and very fashionable area of investment at the moment, it is a small and young market, but it is growing very, very quickly, and already we have seen investment range from tens of millions to hundreds of millions, and we think soon billions of pounds or dollars a year or euros will be invested in startups and early stage businesses. We are also beginning to see more companies achieve success, and by that we define success as being able to sell the business onto somebody else within 5 years. And that is something that investors are very interested in, because they would like to see a return fairly quickly for their money. Traditionally, in the past, maybe it was 7 to 10 years. So you can imagine this is encouraging investors and more investors to start investing. And the good news is, for any females listening, that there are more women in the world of angel investment. Up to 15% of investors now are female. And there is also evidence we are seeing from recent research, particularly in the UK, that investors are getting younger. There is more variety also in how they like to invest. But the most exciting investors in sectors for them are still technology, media and telecoms, which we call TMT, medical technology, renewables, and consumer retail. They are led in their investment direction by the hopes of high returns and investor sentiment. They like the idea as well as backing the big next idea and making a lot of money. Also the idea of saving the world. So if you are looking for money, it is a good idea to be able to show the different aspects of your business and how you are not only making money, but helping people. And there are some sectors that investors really do not like. They do not like in sectors where there is an awful lot of money to be invested before there is any certainty of customers or an exit to any buyer. These areas include areas like biotech and heavy manufacturing, which, as I'm sure you'll understand, are areas where it is expensive to get to a customer relationship with a proven product. The amounts that investors invest per round is growing. This is good news for entrepreneurs who need cash because they are growing quickly. This is happened because of two reasons. One is that investors now understand that you, the entrepreneurs, are going to need a lot of cash to grow your business. But also investors are increasingly what is called co-investing, i.e. they both all invest alongside one another. That is also known as syndication, and this helps them to raise larger sums because you have many investors investing smaller amounts, but together it becomes a large amount. And valuation is still a very hot topic. I'm sure you want to retain a large amount of your company. Investors are beginning to recognize that valuation is a hot topic, and they have to keep the entrepreneur motivated with enough of the company that that individual will continue growing the business and working very hard. But methodologies of how you choose what the valuation should be are very varied, and at the end of the day it is a negotiation between the entrepreneur and the investor. Investors are motivated by very different things, but the fundamental questions for an entrepreneur to ask are, and it is true you should always talk to an investor and ask them questions as well as letting them ask you questions. You should find out whether they are investing their own money or somebody else's. Are they representing other investors if there is a syndicate or not? How quickly will they be able to invest? Is the money available right now? Are they able to follow their money in the next round of investment? Because for many entrepreneurs, you will raise several rounds of investment. And you need to understand how involved they want to be in the business, what role they would like to have, and if they are not going to have an active role, how you would like to have a relationship with them in the future. Is this communicating once a year, once a month, whatever? With the investment, you want them to understand, find out, do they understand about the business you are running? Do they have experience of the sector and what is going on? Can they add value to the investment? Can they introduce you to customers? Are they invested in a competing business? And if so, why do they want to invest in your business as well? And what are their exit horizons? Are they the same as yours? Do they want to exit very quickly or not? What do angels want? The original motivation for all angels is that we would like to help people, but very quickly this is overtaken by a desire to make money, even if the risks are high. They like to identify with scalable businesses, so it is a bit like they want to be able to say, I have backed the next Apple. And this means they can take decisions which are not as rational as you might think. So that can be to your advantage, but you should always make sure that they understand what you are doing with your business, because if you have the wrong type of investor, it can be very unhelpful in the long term. Crowdfunding is a very new area of investment, as I mentioned earlier. A lot of investors are very curious about this type of investing, and we are seeing a lot of new investors. The biggest equity platform, for example, in the UK has 145,000 registered investors. They want to make some money, but they also want to have some fun, and they are encouraged as well when the government has tax breaks for them. We are seeing one big issue in crowdfunding at the moment, which is that valuations are very high. This is a good thing apparently, but long term it may be challenging, because if valuations are too high in early rounds, this can cause problems in later rounds, and we will have to wait and see what is going to happen long term. Venture capitalists want something very simple. They are not motivated by desires of saving the world. They want to get great returns for their investors because they are investing other people's money. To be invested in the most successful deals, they need to so they can get great returns. They need to be able to find the right opportunities. And they also need to build a track record of successful investing so they can raise another fund. And that is an important consideration when they decide what they are doing. You should understand that experienced investors do know that this is very risky. When you are approaching investors, remember that they know that over half their investments will not give their money back, and only 3 in 30 will get really amazing returns. You must have a wide portfolio if you're an investor to beat the odds, and you need to understand what you're investing in. The most important thing of all for all investors still is the quality of the people they back. And therefore, as entrepreneurs, remember to present your team in the best way possible. Market opportunity is also extremely important. When investors invest, therefore, they need to try and protect their investment and make sure that they make the right decisions. So they do a lot of research around the transaction, known as due diligence. This includes checking out the people, the product, the customers, and many other things. As well as the IP, the intellectual property, for example, your patents or trademarks, or the secrets you have that make your business better than the competition. They also put in place legal agreements to protect against downside risk, and they use deal terms to work for their best interests, which are not necessarily yours. So they have certain rights that they will claim, including drag-along and tag-along rights, and also liquidation preference, which is designed to make sure that they get their money back first. They try only to invest where they really can add value, but that is always an interesting thing as businesses grow, and certainly that relationship can change about how much value they add. Angels are private individuals who invest their own money in a business where they have not previously been connected with the management team of that business. Sometimes they also invest money on behalf of their family. Most angels are still men, and although they are getting younger, they will typically be over 45 years old. As I mentioned earlier, around 15% of angels are women. They will typically invest between 10,000 euros and 250,000 euros per company they invest in, and they will build a portfolio of a number of companies. They may or may not have a very clear idea of what types of company they invest in when they start, but as time progresses that tends to become more focused. And they are typically looking not for income, so they do not look for a company which will pay dividends. They are looking for a company which will grow very quickly and exit and give them a big capital return. They usually like to feel engaged with the investment, but they may not be actively involved in the deal, and sometimes they are active and then stop being active, or may not be active and become active later on. There are 7 steps to take if you want to raise money from angels. Make sure you prepare well. Have a great investor deck, presentation and business plan. Have all your documents lined up. Get pre-authorization for tax break schemes and everything before you start. Be aware that it will take 6 to 9 months from the day you start to raise a round. Most angel deals close between September and February, so you need to start working in the spring to raise your money. Make sure your business is exciting, the financials look fantastic and your team is great. Use advisors, especially if you have a lean team. Normally at least one person in your team will spend all their time fundraising, so make sure your business does not suffer in the meantime. Be aware that you may have to coordinate from lots of different angels from different places into a round. Plan your fundraising so that you approach as many people as possible at the same time to create a sense of excitement and scarcity in the minds of investors. Never accept a check without a proper legal agreement being in place. Please don't, or you may find investors have all sorts of rights you did not think they had. And at the very least, use a lawyer, and preferably an accountant, to look after your interests in the deal. For crowdfunding, investors start ranging with investments ranging from nearly only 10 euros to 100, but we have seen evidence of crowdfund investors investing 100,000 euros or more in a deal. Most investments are about 1,000 to 2,000 euros. We are now seeing crowdfunders investing over £1 million in certain popular deals, that is between all the crowdfund investors. But it's more typical for a crowdfunding round to be about 100,000 euros. Less than half of crowdfunding campaigns are successful, although many companies that fail will still go on to raise angel or VC funding. Crowdfunders like to follow one another, so it is very important to start a crowdfunding campaign with your own crowd primed and ready to invest when it launches. There are 8 steps to take if you want to raise money from crowdfund investors. Take your time to prepare well. You must have a very good video indeed. Do check other platforms to see people's videos to see what I mean. You should have a very good investor deck which is succinct and accurate and easy to read. A presentation as well and a business plan as PDFs. Have all your documents lined up before you start and make sure you get that pre-authorization for tax break schemes. Be aware that if it goes well, you could have your money in just a few days, so be ready to start using it to grow your business. Make sure your video is really amazing and sells the business. And also it is important to make sure that the numbers you present to the investors add up. And as I mentioned, even in the crowd, they will back people, so make sure your team looks really good. And make sure that if you have any problems with your business or your own lives in the past, maybe you have failed at something and have restarted, tell the platform operator before you go live. It will be fatal if such information comes out during the campaign. It is better to have it all clear before you start. And remember that during your campaign, you will be having to work long hours for several weeks. So make sure you have somebody to run the business while you are running the campaign. Check when the best time of year for a campaign like yours is going to happen. For example, if you have a seasonal business, time your campaign to fit when most funders are interested. For example, if you are a holidays business, run your campaign when everyone is thinking about their summer holiday, but also when most of your customers are about to buy their holidays. It is possible to run a crowdfunding campaign alongside an angel VC round, but it will be hard work. Try to get big angel VC money committed before you start your campaign and get them to launch your campaign with their funding. And also have a strategy ready that when your campaign closes and you have raised your money, how you will talk and communicate with your new investors post the round. Venture capitalists are different from crowdfund investors and angel investors because they invest other people's money, and they sometimes will also invest alongside personally with this money. They get the money they invest from individuals, pension funds, governments, and sometimes corporates. Their funds are either evergreen or fixed life. If they are fixed life, it is usually for 10 years plus an extension of 2 years. Most venture capital firms are run by men. They are often 25 to 50 years of age. They will have a range of very fixed criteria which will have been set by the people who gave them money to invest. This may have restrictions such as geography, sector, amount they can invest, or the stage of company they can invest in. Depending on the type of fund, they are either looking for capital growth or capital growth plus income. The vast majority want to be very involved in your business, including regular phone calls and meetings and probably sitting on the company board. The first 100 days after they invest is very important for them. There are 9 steps to take if you want to raise money. Prepare well as always. Like with raising angel money, have your investor deck, presentation and business plan ready. Have all your documents lined up and make time in your diary to attend meetings and answer questions. Be aware it will take you 4 to 6 months to raise a VC round from the day you meet the VC. You must appoint advisors such as a lawyer, accountant and corporate financiers. Most VCs will not invest in an opportunity sent direct to them. They will only back ones and look at them if there is already an advisor in place. Make sure the financials add up and that the team looks backable. Double check for inconsistencies in your story and correct them. And confess to any skeletons in your cupboard early to your advisors. Again, it will be fatal if this information comes out in the middle of discussions with investors. Remember, VCs will test you hard. They do things like little tricks, like ringing you late at night to get you to do something for the next day, to see not so much that you do the work, but how you respond to the stress. And remember importantly that the deal is not done until the final paperwork is signed. A term sheet is not a firm offer to invest. Like angels, VCs have times when they most like to invest. Check out their funds to see if they need to invest quickly, for example, because the investment window in the fund is closing shortly. Do not waste your time or the VCs by approaching VCs who will not be interested in your type of business. And remember, as I said, the first 100 days after investment are the most important for a VC, as this is whether they will find out whether you can deliver on your promise and plan, whether you over-deliver or whether you under-deliver. We talked earlier about other motivations. Here are some true examples of real investments where investors were motivated by apparently the wrong thing, but which had some surprising outcomes. There was an investor who bought into an investment to buy themselves a job and took out more than they invested in salary in the first year of working. That is not a good example of a great investor. There's an angel I know who invested in a sector they did not understand at all in order to co-invest with some fellow investors who they had not met. What was surprising about this one was even though the investor did not understand the deal, they still exited within 3 years to great profit because those other investors were very good at investing. And there's an angel whose investment was like what we call the English antique broom. They kept investing in new management teams and new business models in alternate order for years and years until the deal looked nothing like the original one, but they did exit successfully. There's a VC, for example, who overpaid for an investment just so they could be seen to be co-investing with other cool VCs in that deal. That is an example of a bad investment. There's the VC who invested in a great technology and then realized that the founders, who were Russian, wanted to go home and did. The VC was based in the UK, and they left the business without anyone to run it, and the VC lost and unable to get their money back. And then there is the deal recently in the crowdfunding world where investors invested in a business fronted by a famous TV personality, even though the valuation of the shares was outstandingly high. We have to wait and see whether this deal will be a great success. The conclusion is it's very, very important to look at investment and equity in the right way. If you do that and find the right investors, you'll get value for your business like nothing else. For the best external investors, the money they invest will be worth less than the market opportunities they bring you. You need to be highly focused and engaged if you're going to raise external finance. Remember, it takes a lot of time and commitment. You will have failures because some people will not be interested, but if you push hard, you will find the right investors. It takes real time and commitment to achieve a successful fundraising. Not all types of fundraising will be suitable for everyone, so research to find out what is best for you before embarking on a campaign. And take lots of advice before you start and while you are fundraising. Usually people will try to be positive and helpful. And always listen to investors, never have a fight with them or argue, and accept that even if you do not take their advice, it will probably tell you something useful.
Thanks a lot.
Perhaps
Anna.
I will just...
Yeah.
Anna, would you like me to say a few words about debt funding?
Yes, definitely. Why not?
Okay, right, everybody. I know that we have had, with the financial crisis across Europe, a belief that many banks will not invest or back or lend money to companies. This is true in some ways, but also they do back some people, and therefore it is worth investigating whether your bank has an attitude or approach to be willing to lend to your business. Some governments give banks support, so they will lend to you. And when a bank lends to you, they will be looking for proof, most of all, that you will return the money they have lent you to them. Therefore, it is important to give them that sense of security and understanding. Do, for example, consider whether you are prepared to personally promise to pay the money back, even if the company fails. And also maybe you might have to offer a guarantee such as the security against your house if the deal fails, if you fail to lend the money, give the money back. But not all banks are closed for business, so do not dismiss debt funding out of hand. Thank you.
Thanks a lot, Modwenna. Thanks also to Candace. Now we would like to move on to questions. Modwenna, I will still not unmute you. So please, if you have any kind of questions, then you have a button on your right top, and you can raise your hand in order to Okay, no questions? Okay, we have a question from Iphigenia. Iphigenia, I will unmute you now. Iphigenia, you're unmuted now. Hello? Iphigenia, can you hear us? Okay, so is there any other questions? Because it seems that only Iphigenia raised her hand.
Can you hear me now?
Yes, we can hear you now.
Yes? Okay, sorry. Um, First of all, thank you for a very interesting presentation. Perhaps some things are not so clear to us yet. When you are talking about exiting, you mean about reselling the company or just the investors taking the money out of the company?
Oh, hello. At the end of the day, it is about the investors taking their money out of the company, but that is usually via a sale of the whole company to a third party, which is usually either a trade sale, a sale to another venture capital firm, or a flotation of the company on a stock exchange. Is that the answer you need?
Yes, I'm just trying to understand that if it is the right fit for a company to approach this type of investors, because you said that they don't like heavy manufacturing, and we actually provide some IT solutions that are for heavy manufacturing. So maybe we are not so, let's say, attractive to them.
I think actually, if you are one of the interesting things about if you are selling your IT solution to companies involved in heavy manufacturing, over the last few years, that the heavy manufacturing world has built up a lot of cash because they have been being very efficient, and therefore, I think if you are a supplier to that industry as a software company, that would actually, ironically, be of great interest to investors.
Okay. Also, would it be possible for you to send us the presentation so that we can forward? I mean, I would like it to show it to my managing director so that I could inform them better on the opportunities that are involved.
This will be uploaded on the Eureka HTIP website, so you will be able to just...
Okay, so that's good. Very good. Thank you very much. Thank you.
We have another question from Michael. Michael, I will unmute you now.
Sorry, yeah, I got a couple of questions. The first one was regarding the margin the different investors are looking for. I assume that business angels, crowdfunders, and VCs will look for different margin. Maybe crowdfunders just want to get twice the money they invested, and maybe the VCs want maybe 10 times more. So could you please refine this kind of...
I think less than on any one deal, every investor wants what they call a home run, which is 10, 20, 30 times their money, and they should invest. All of them should be investing with that in mind. If they are not that ambitious, they should be questioning whether they are investing in this market. The other way to think about it is that investors who build a portfolio probably want to get an average of 15 to 20% a year every year for the money they have invested. So when they get the final result, they will basically take the final number, divide it by the original number, and say, what is my average return? So, but I do not think it's fair to say crowdfunders want a less of a return than VCs. Probably VCs will be more focused and more sort of ringing you up to check how you're doing than a crowdfund investor. But you should treat all groups as if they are very ambitious to make a lot of money.
Okay, thank you. I got another one.
Did you have?
I also got a question, but maybe it is more focused on science rather than maybe other kind of companies. But what do you think about the importance of the scientific board or the executive in the funding process? Because you mentioned previously there was an investor who were investing in a company just because of the star from the TV. But it is rather the same maybe in science. The investors are also looking for Nobel Prizes or something like this.
I think that things that give you sort of gold stars, so good patents, great scientists, are all very important. But it is easy to get misled into the sort of the gold stars and not the reality of what a business is about. Investors invest for a business to grow, so they can sell the business to make a lot of money. So what you want to do when you're thinking about advisory board and people who help you is, as well as helping you get a brilliant product, even more important is get brilliant customers who buy the product. And certainly the US has many examples where it is not the best technology that wins, it is the team that are best at selling it profitably to customers. So you think about that when you are building your team, is say they may be great scientists, but even more importantly, can they introduce you to the great customers?
Okay. Thank you.
I have another question from Jakub. Jakub, can you hear us?
Yes, can you hear me?
Yes, we can. Go ahead, please.
Hello?
Yes, we can.
Hello, can you hear me? Can you hear me now?
Yes, we can.
I can hear you.
You can hear me? Okay, great, thank you. So this is Jakob from Motivio in Norway. I have a question about angel investors and whether you can say something about their interest in investing outside their geographical area. I know that a lot of the venture capital firms, they will only invest in, you know, where they have very close connections and close geographical connections. And I wonder if that's the same with angel investors. Do they have the same desire, or can we as a Norwegian company, hope for investors?
I think investors tend to like to invest where they can have a relationship with the entrepreneur. So we are seeing more investors investing overseas, but I think there are two things to think about. One is, are the local investors they can invest alongside with, so they can receive the benefits of having local people who are, as it were, nearby. But also, if you would like investors from overseas or outside your local geographic region, have a think about how you can really help communicate with them by using the internet, telephone, Skype communications, whether it's having a special closed Facebook page or some other system, because what makes a difference for investors and entrepreneurs where we see great success is when there is excellent communication between the two.
Okay, yeah, that makes sense. Thank you.
Okay, if there is no other questions, then thanks again to Candace and Modwenna for their great presentation. And I would like to again thank you all for participating. The next webinar, as you can see on the slide, is on the 17th of March at 2 p.m. CET. And we will have Rikwa Sakainen, the president of Finnish Business Angels Network, and Paolo Andres, president and host from EBAN, and they're going to be talking about raising capital through an effective process. You can register via Eureka HTIP website. Looking forward to seeing you or talking to you there again in a week. So, thanks again, and have a great day. Bye.